as we head towards the year end and with the ongoing US-China trade tiff and Saudi Aramco IPO, we would want to know where rupee will trade at the end of December and in the medium term. So today we have a very special guest, Mr. Rahul Gupta, Head of Research Currency with Emkay Global. So we'll go about with the questions, sir. Sir, with the Saudi Aramco IPO, do you see a supply crunch in dollar globally?
This is definitely a very important IPO as compared to market's expectations. If you see, 1.7 is already been subscribed, which is as compared to market expectation low. And in dollar terms, $44.3 billion has been already subscribed, again lower as compared to the market's expectations. And in next couple of days, the IPO is any which way is going to get over. So I am not expecting any further dollar crunch because of this going forward.
Okay. Sir, at this time like December at year end, we generally see a lot of year end outflows, and also crude is trading on the slightly higher side. So where do you see rupee by the end of this month?
So I'll take this question in two ways. So first, if I talk about the outflow, you have rightly mentioned, around this time of the year, we see a lot of outflow of money. But this is only because of the financial year closing across the globe, and the money outflow is only because of to get the inflow in month of January. So I don't see much of a rupee depreciation because of this. Instead, if you see in last 5 years, whenever there has been outflow in month of December, rupee has appreciated despite being depreciating. So that will not have much of an impact on rupee front. On the crude, on 5th of December, we have the OPEC meet. Now OPEC is expected to increase their production cut by 1.6 million dollars per barrel. So that is going to have a lot of impact on the market. If I talk about Brent currently, which is trading very close to 60-61 zone, I am expecting it will go to around 63-64 levels, not beyond that. And if I talk the impact on rupee, the rupee is trading in a very much broad range. If you have seen, from 70-50 on the lower end to 70-50 on the higher end. I continue to expect that rupee will trade in this range. Either side breakout will give us a further clarity. But having said that, 70-50 will act as a very important resistance. And because of all this issue, which is Aramco and OPEC meet, I am expecting rupee will once touch around 70-50 odd zone, and that would be a very good selling opportunity for the marketplace.
Okay, sir. So what will be your suggestion for exporters?
So for exporters, I think they should wait before hedging. If they are expecting some money inflow in the month of December or mid of January, I would suggest them to hold for some bit of time. They might get a better level. On the importers front, I would suggest them to start hedging their positions as and when they find a dip, because as I said, I am expecting markets to touch around 70-50 odd zone, and from there it may fall. So with a long-term perspective, importers should wait, and for the short-term perspective, this is a good time for the importers to hedge.
Okay, sir. Sir, we have seen there are a lot of uncertainty around the US-China trade tiff. So there have been mixed news regarding this. So what strategy will you suggest to deal with this uncertainty?
So US-China thing is an ongoing thing, and now again the situation has gone slightly volatile after Trump supporting Hong Kong for the US bill, for the China bill. So that has again created some kind of an uncertainty in the market. Having said that, I am not expecting phase 1 deal to happen anytime soon, but it has to happen. It has to happen because November 2020 we have elections in US. So before that, I am expecting the deal has to happen. When and how, I think Mr. Trump is the best person to answer that. But to take a trading strategy on that, as I said, I am expecting a broader range of rupee for the month of December, that is 70-50 and 70-50. I would be a seller of USD INR on every higher level.
Sir, we recently saw that GDP has fallen to 4.5, and with the recent announcement by Finance Minister about their unveiling of a series of infrastructure projects. So, what are your views on the fiscal slippage? As in, also the cut down of corporate tax is also putting pressure on fiscal deficit. So, what is your view on this? And with RBI rate cut view? What is your view on that also?
So GDP numbers, as you have rightly said, it has come down very much low. 4.5 was the last reading, which is very much low as compared to market's expectations. Having said that, RBI and government has taken they have played a lot of important role to correct this. And how are they doing so? If I talk about RBI has already done 135 basis point rate cut in the month of in the year 2019, and on 5th of December again we are expecting another 25 basis point rate cut. So accumulative 160 basis point rate cut has already happened from the RBI's perspective. One. Second, on the government front, they have done a lot of fiscal stimulation. In a sense, they have cut the corporate tax. So in the month of September, government has already given a relief of 1.45 trillion rupees, and that was financed by the RBI interim dividend. So RBI had an interim dividend of almost 1.76 trillion rupees. So it has been financed through that. So I don't see a direct hit to the fiscal deficit numbers because of this. Having said that, there would definitely be some of the slippage which will happen. At the end of the day, government will manage 3.4% of their fiscal deficit target for GDP. And on the rating front, of course, the rating agency will enjoy this part. They will see that government and RBI doing a lot of corrections to see that the growth revives again. So I'm as of now not expecting much of a credit default or credit rating cut on the India's perspective. More or less, I think it will be on a stable note.
Okay, sir. Thank you. Thank you so much.